Good afternoon. This is Ken Long at Tortoise Capital with the review of the daily trading report for 9/22, September 22nd, 2016. See, the risk Z has started to slope up. This is now getting us into the territory where swing trades are beginning to be feasible. We've seen in the ADX, the bulls have now taken over from the bears. So that would be the direction we'd be looking to play the swing trades. Have a few in the auto framer, and then a channeling in DuPont and a triple screen in Goldman Sachs to frame up. Bullish normal conditions, we are overbought on a 10-day basis, as you can see from the 10-day NDX. No signals in channeling and overreaction from the primaries. Many dojis today. Big gap up and then almost no follow through. So it has some concerns there as like a shooting star doji where there's no intraday follow through. So tomorrow I'm expecting a larger volatility range day and intraday movement. Same story in the ETFs, a handful of dojis and then only VXX showing favorable on the reward to risk. Here's our auto framer key price levels and regression line fractal framework, the same usual suspects here with most ATRs below their own RL270. These are the deep discount value plays, if you will. ExxonMobil, McDonald's, Coke, GE, and Johnson & Johnson. And then in the red on the bottom shelf, these are the ones that are overheated, that are the most ATRs above their RL270. Apple, Intel, American Express, JP Morgan, and Verizon. Daily squeezes. These are the ones that are well postured for a large one-day move using their range risk from today as the initial risk. This is a failure to fail further and some recovery. We are back now to that 217-ish price level. We've seen the RL30 has now crossed its 10-period moving average now. Recovered the price level here with respect to the 200. So I think there's room for a 3 to 5% move to the upside here for swing trading. It's got to get through 218, but above that it's free and clear. We're going to take a look at some intraday trades next from the chat room. We're still playing really short time frames right now because of the uncertainty in the market. This was a topic that came up in the chat room today. We were just looking at criteria for picking good intraday fraud candidates. It's not just fraud quality number greater than 3, but these other conditions that increase the probability for a larger than normal intraday move. And those are the kinds of things we want to trade our fraud setups with. So we had that discussion today. Now onto the charts. This chart was a reminder of the need to frame the trade in both directions. We had an owl short correctly played. The exit may be a little slow. Maybe we'd like the exit right about here. And then we could play stop and reverse here to catch this move. Or this becomes a Z3 pinch breakout right here and with an entry here and a stop here. So we should have some systems that allow us to get long in a rising valuation scheme right here with the RL270 facing up, the slope of the river up. That the owl is still a good play on a retail. That trade was a based on a trade frame to get you to the RL270. But when that fails here at the RLXT, we've got to be prepared, especially this early in the day, for that kind of a move. Still, I like the risk management on the exit. This is the opening trade in the day in the EWZ Brazil sequence. So here's the marker from the close. Closed here and then gapped up and opened here. So we're about 15 minutes into the day. We get the RLXD and the baby dragon rolling over, but we don't get any collapse. Back down to the RL270. Instead, we get a pocket entry. So we play that one. Has an orderly move, but really no upside pressure. There was nothing moving in the market after everything had the big gap up. Everything was kind of sideways. And so as this started to fail with a 1, 2, 3, waited an extra couple minutes for the RLXD confirming and cashed a fractional. So that fractional exit was here, and then we'd play a stop and reverse on a owl on the short side, stay in that one till we get the RLXD, and then we play the long side, again this time looking for a retest of the swing high. So this is second trade in that series. So that was our first trade. Our second trade, the stop and reverse owl. Stop and reverse. Now we have another owl going long. Not much follow through. Gets to the VWAP and just kind of halts. So we take a fractional win here, and just really to get out of that position. And now we're looking, as we're approaching 11 o'clock here. This is looking like a Z3 pinch beginning to form with a sideways quiet channel. So we're looking to let that confirm with a breakout of either Z3 line right now. We then get a series of shorter trades. Here was that Z3P forming, and then we get the breakout to the downside. So you enter here with a stop at Z2, and it started entering into the sideways quiet, so I just decided to cash. It did not look like it was failing to get back to yesterday's close, so we take that segment. It continues on in the sideways chop and then fails to the downside. Another Z3 pinch breakdown for another fractional win. By this time we're heading into lunch and I have some afternoon commitments. So that's 4 in the series right there with some fractional gains. That's just hard work on an inside day with low range and little intraday volatility. But that's the kind of day it was, so you follow the rules and you take what it'll get you. That's everything for today. Ken Long at Tortoise Capital. Keep your risk measured and your powder dry.